Ian Bremmer, in your book, Every Nation for Itself, you talk about a G0 world. What exactly is a G0 world?
A G0 world is one without global leadership. We've experienced the G7, the G8, the G20, but before the financial crisis, all of it was really the G1. It was the United States, our allies, our priorities, our capital, our institutions. The World Bank may sound global, the World Series sounds global. It was really an American institution. Now we're not providing that leadership. We don't want to, even if we have the capacity. We're just not going to, but no one else is either. And that is what I call the G0 world. It's a radically different environment, not just politically, but for investors too.
Well, one of the great things about the book is you point out the winners and losers. So let's run through them.
Sure.
One winner in this new G0 world, you say, is Brazil. Tell me why.
Well, Brazil is one of a group of countries that are able to effectively adapt to very different environments. I call them pivot states. Brazil has a great relationship with the United States, has meaningful trade, financial institutions very aligned, but their largest trade partner now is China, and everyone wants to have an opportunity with Brazil. There are countries out there like Turkey, like Canada, like Indonesia, like Singapore that pivot very effectively between different models of integration. Those are countries that are particularly successful in a G0 environment.
So you mentioned China. Will China be a winner in the G0 world? Because the expectation is very high.
Well, for short-term investors and for corporate CEOs that are only thinking about the next quarter, they're going to keep piling into China. But the fact is that of all of the world's large economies, no one has anywhere near the level of volatility in potential outcomes that the Chinese have. They have to fundamentally rebalance their economy and their political system in order to continue to grow and maintain their own stability. That's a dangerous thing. The U.S.-China relationship is deteriorating. That's a dangerous thing, and that will make folks more wary of throwing money into an environment that they're taking a lot of risk. The old world was one where you took a lot of risk, you sought a lot of alpha. This world is one where growth and resilience together matters a lot. The Chinese have the growth, they don't have the resilience. It makes them a more problematic bet.
Well, before we get to the United States, I want to find out about the losers. Who are the losers in the G0 world?
Well, some of the clear losers are countries that can't pivot, countries that are stuck with one model, they get subsumed by a dominant neighbor. So, for example, Turkey can pivot, but Ukraine can't. All they can do is Russia. They'd love an EU customs union. They can't have one. Taiwan wants to join the Trans-Pacific Partnership, but all they have is China attachment. They're a loser too. Also, U.S.-led global institutions are losers because they no longer are going to have efficacy. They're going to have to become U.S.-led institutions that aren't global, or global institutions that aren't U.S.-led.
Institutions like?
Like the IMF and the World Bank, like Doctors Without Borders and the Peace Corps. Anyone that was a big U.S.-led global institution that relied on values, relied on American projection of global power, that's problematic. And also some of America's allies and friends that are more isolated. Here I'm talking about countries like Israel. I'm talking about maybe Great Britain. I'm talking about Japan. They will have some difficulties in this environment too.
So if America's friends are in trouble, what does it mean for America? Are we a winner or are we a loser in a G0 world?
The United States does better than you'd think. I mean, clearly the previous world order was better for us than this one because, we were the dominant superpower. We created all the architecture. But if the United States decides that we don't want to ensure that the Straits of Hormuz are going to have open passage, that's a problem for us. It's a much bigger problem for everybody else that has a lot more exposure to that issue. And that's not just true with Iran. That's true for the Middle East as a whole. It's true for the European economic crisis. It's true for many, many things. The United States is a safe haven. And the only danger with the G0 is that it helps to create a safe haven curse. That we don't feel the urgency that the Italians or the Greeks or the Portuguese do. And so as a consequence, we put off the investments we need to make in our own long-term future to make us more competitive so that in the post-G0 world, the United States will continue to provide the kind of opportunities for our kids and our grandchildren.
And how does this translate into investing into U.S. stocks and bonds? What should an investor take from your book?
Our investors should take away, first, that when they're investing in big multinational corporations, this is not a stock picker's world. 20 years ago, 30 years ago, you could throw darts at a board, you were going to get your 10% return. It didn't really matter, sort of what kind of macro value drivers you had. In this environment, picking actually matters a lot. You have to be more focused on the safety of your long-term portfolio in this environment because there's so much more volatility, and you have to recognize that even for U.S. multinational corporations, some of them hedge very well. A Coca-Cola in 208 countries, 1.8 billion transactions every day. Some of them don't. If China doesn't do well, Yum Brands is in trouble. Right? KFC, that's their growth model. You got to be careful about those sorts of things, even investing in U.S. corporations.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to